Good afternoon, everyone. I am CA Surbi Kabra, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by CCLEA and NPO Committee of ICI. It is my pleasure to be a moderator in webinar on new norms for practice in RERA effect on real estate sector on 14th August from 2 p.m. to 4 p.m. Being organized by Committee on Commercial Laws, Economic Advisory, and NPO Cooperatives of ICI. In a short while, we will start this webinar. I would like to apprise you about CCLEA and NPO committee. This committee is focused to encourage chartered accountants to shape strategy and policy that unlocks economic, financial, and social value, while combining analytical foresight with commercial acumen. One of the core areas of this committee is to serve the multifunctional task of analysis, knowledge dissemination, inputs to regulators on policy formulation, to develop and publish technical guidance, background materials, etc., and to create awareness for professional opportunities for chartered accountants in commercial laws, economic advisory, and NPO cooperatives. Our eminent speaker will talk on new norms for practice in RERA effect on real estate sector in this webinar, and we hope that the same shall be useful to the members. Now, before beginning with the seminar, I would like to introduce you all with our speaker of the day, CA Amit Kumar Kedia, sir. Mr. Amit Kumar Kedia is a distinguished chartered accountant and partner at Gopal Sharma and Company, bringing over 17 years of comprehensive experience in finance and consultancy services. His expertise spans multiple specialized domains, making him a valuable advisor in India's financial landscape. Sir, core competencies of the SIR is regulatory compliance, RERA, SEBI, regulations, IFSCA, GIFT City, legal and dispute resolution, litigation and arbitration, investment vehicles, alternative investment funds, REITs, SM REITs, capital markets, SME IPOs, social stock exchange, corporate services, forensic audits, due diligence. In international finance, sir is doing ECB, FEMA, and labor law compliance. Mr. Kedia has established himself as a leading authority in fundraising strategies across various financial products, providing strategic guidance to both entrepreneurs and established corporations. His guidance has been instrumental in numerous successful projects nationwide. As a passionate speaker, Mr. Kedia shares his insights at various industry events, demonstrating his commitment to fostering knowledge within the sector. His primary focus is on fundraising and financial strategy, reflecting his dedication to supporting entrepreneurs and business in their growth journeys. Now, I think I should hand over this podium to the sir. Now, sir, please continue. Thank you so much.
Thank you, Surbi. Thank you, the committee of NPO, Chairman Abhay Chaturji in his absentio, and Vice Chairman Pramod Jainji in his absentio, for giving this opportunity and to share this important topic with all our members. The efforts of the Secretariat cannot be denied for like organizing it and doing like all the coordinations what the efforts secretariat of the committee have taken. Friends, it's 2025 when we are there for this webinar, and it was 2017 when this act through this real estate sector of the regulations were there. So almost like it's been 8 years. So what I expect is today, like we are having a basic idea, basic overview of what this act is all about. So to make it more interactive, we are sitting at different part of the country, maybe at different part of the world. But I would like to keep this session interactive one. With this, like maybe I might be knowing new things from our members who are there in practice or who looks forward for this practice in a different manner, different approach, or maybe like the other members get to know like what is more going in industry for the things I might have skipped or I might have not told. So just to brush up our memories, just to, I would love to know from our members. Please put it in your comment box, like what RERA is all about, why it had came. So anything like you all know about RERA. So I just take 2 minutes of a break to see the chat box where like I look forward that our members put this as a answer in the chat box, like what RERA is, why it came, what could be or what is the benchmarks or like the applicability of this act, to whom it is applicable, anything you know, like would love to see in the chat box. So let's keep this session an interactive one, so that in another 2 hours we learn from each other. That like would be great. So nobody is writing anything either in the chat box or in the Q&A box. So is like anybody can put their questions. Can somebody from the tech team acknowledge? Like if the
Sir, I would just
member.
let sorry, sir. I'll just let you know that the questions would be visible to the moderator after the end of your session, sir, and can be taken up at the last. However,
No,
it's just
can
visible. It's just
can it
visible to
be?
the moderator.
No, can like the participant put their questions or like their discussions in
Actually,
the chat box or not? That's what I want to know and understand.
Sir, the members or the participants have joined through a different registration link, and
Okay,
you or say any other moderator has joined through this Zoom link, so they are not available here on this platform, sir.
okay.
So
So how
it
I
wouldn't
can
be
like
possible for
get.
them to like
Okay, got the point. So it would be like my interaction only. Like I won't be able to get anything from the
it's a one way communication, sir.
one-way
Yeah,
communication. Okay, got the point.
it wouldn't be an
Okay, got the point. So I accordingly work it out. Okay. So friends, like I am assuming these basic things, what RERA is, to whom RERA is applicable, these points are like very well known to each and every one of us. But then also for like the convenience of our participant, as and when like some basic things would be required, I would be sharing and discussing. But I am trying that we level up our discussions today. We level up our uh, webinars topic, which is on the RERA, to then extend that we understand like today what all is required, how RERA have uh, gone through this 8 years of journey, where we are in this 8 years of journey, and now looking forward, moving forward, how this journey could be taken by any of our members. To an extent, friends, the act might be 8 years old, the regulations might be old, but believe me, the developments which are happening on the day to day basis are so dynamic, are so frequent, that at times I think that there was a time that GST used to have the same feature, where every day, every week, there was some so big dynamic changes which used to happen as compared to other laws. Things are happening in a similar manner in this also. This act is a very small act. It is just having 92 sections in totality, but the regulations are across the states. Having said that, land is a state subject. So the power to make the rules is with the state. So because this power is with the state, any changes which are happening at the state level, it is creating a dynamics where the changes are being seen and visualized in a far more dynamic manner. Just to like give an overview, real estate is the second biggest contributor in GDP of our country. This is the sector which contributes the maximum. It is the sector which gives the maximum employment generation in the country. So it is not that a building is being created or a plot have been sold, but the allied activities in terms of the efforts which have been put in, the industries which are directly and indirectly dependent on it is a very huge. And as we have known and understood, roti, kapda, makan, these are the three essential things which any human being is required. So, makan is what is real estate. So, how and why this RERA came in place? What were the reasons?
Excuse me, sir.
Yeah,
Sorry to interrupt in between, but since the beginning you asked the question to the people about RERA, to the members, some of them have answered. So just to let you know, so that you can do it in a better way.
yeah. So
Some of
let's
them,
keep this, Surbi. Then you need to help me out throughout this
I
whole
would.
2 hours in a manner like the questions which I am requesting for the members to answer. You can become
Can convey the things to you back.
yeah,
Yes, yes, I
communicate
would.
to
I
me.
would.
That would be great. Yeah, Surbi,
So the
please.
way you wanted to keep the session be like, so that's why I interrupted. Sorry.
Yeah, that no, it's not interruption. It's like the right call you have taken. So yeah, please go ahead. Yeah.
So some one of them has answered to regulate the builders. Uh, the RERA, why the RERA has came into effect to regulate the builders. Then there is another answer to bring a structure, transparency, and regulations amongst the allottees and developers. Then again, RERA Act is aimed to regulate real estate sector. Then one other replied, compliance for builder to maintain RERA account, certificate from CA engineering, etc. And there is one question also, sir, if we are new to RERA, how can we start? These are 5 things which I have got in my chat box.
Wonderful. Thank you. So I think so you also remain here only. You don't go. And like
No, I won't.
as and when like the questions are being answered, then you can like
Yeah, yeah.
help me out with this communication. That would be
Yeah,
great.
sure, sure. That would be
So
good.
So as I told you, friends, there's a like last question, that last answer which was told, and it was a question also like if we are new, how we can kickstart the practice, and like which was answered by me previously also. That don't think that it's an 8-year-old act. This act you can feel it and you can understand that it's an a fresh. So today, if you want to kickstart your real estate practice, why I'm saying the real estate practice? Because now the RERA is the key for the real estate practice. As we know, uh, RERA is going in and around each and every activity which a real estate is being carried with, if that real estate is having an intent for getting it advertised and getting money from the buyers. So that is the reason I'm saying that real estate practice is now a synonym, you can say, more towards RERA. So with a confidence, you can very well start. There are only, as told previously, there are only 92 sections, and here where like the acts gets completed, the dynamics is so much that it keeps on changing because of the regulations and the rules, the new horizons which we would be understanding, which are coming at the state level. So if somebody wants to kickstart the practice today, they can very well kickstart it, and it would be as simple as you would had done or started your practice 8 years before or 9 years before, when the draft regulations, the draft act was there way back in 2015. So, friends, moving on to understand, as you have told, like it's a regulation for the developers. It's a regulation which is there to control, to see the allottees are being taken care properly and they are not being defrauded, or like any misguidance would have been given, then that should have been stopped now. So, just to give an overview, 5 minutes I just take to give an overview. It was 2017 when the act came in place. If any of the development which is having more than 8 units, then those developments would be coming in the ambit of RERA. So that is in terms of unit. In terms of area, the land should be more than 500 square meter. In some states, this limits have been reduced because the power of regulation have been given to formulate the rules, have been given to the state bodies. So in some of the states, this limit have been reduced. So if we say that if the regulation wants to reduce these limits, they can reduce it. But if they want that they can dilute it or they can make it easy, then that is not in the power of the regulation, or you can say the state RERA authority. That is what we need to understand very clearly, and that is a very most important thing. So, if I'm telling 8 units and 500 square meter, no RERA authority can say tomorrow that I come with a regulation where 10 units or 1000 square meter could be exempted. That would be a pure violation of the act and they cannot do it. But if they want that they can reduce it, then the reduction could be done. In addition, it is the planned area which have been proposed, but if the authorities wants that it should go to the unplanned area also, they can, with a notification, they can bring it to the non-planned area. So many, almost all authorities now have came up with this notification, wherein the planned area and the non-planned area, both the areas are now covered. So any development which is more than 8 units or 500 square meter would be required to get themselves registered with the authority before they go for any advertisement, or they are willing to take any advance from the home buyer. There is a big confusion which is there. Many people think that this is only applicable on the apartments. It is not applicable on the land. But friends, let's be very clear. This is applicable on the land also. So tomorrow somebody wants that I want to sell a 500 square meter land, dividing it into 10 pieces of 50 square meter. So I have breached the units. Now the units have gone to 10. So because of this breaching of the units, this project might be so small to an extent of 500 square meter. Then also they need to go and get this project registered. Same example, if we try to change the area. So in case this total land area is 501 square meter and somebody wants to cut it to five parts, then also, in spite that the units are less than 8, this project would be liable to be registered with the authority because the units might be less, but the area have exceeded 500 square meter. So it is applicable on land development, land selling, and the high rise, or you can say the construction, the development of villa, each and every development which is having an intention of selling and uh, taking advance and marketing, that is advertisement. There is an ambiguity where it is said that would the industrial land, industrial plot, industrial development would be covered in the regulations under the Act of RERA. Many of the states have given a clarification where they have put in place that these developments under industrial development would not be covered. But majority of the states have now clarified and given guidelines where they have said that these projects which are in the industrial category would be required to be registered with the RERA authority. So I am assuming the act, the applicability of the act on whom, that is like almost clear to you. If there is any ambiguity, please put in the chat box, and Surbhi would be helping out to ask questions on behalf of you at this given point of time only for the applicability of this act. In addition, it is very much clear that if somebody wants to kickstart this practice, it is very simple to kickstart this practice because it's only 92 mayor sections and the changes are so dynamic that if somebody wants to now start their practice with these changes, it would be very feasible. Moving forward, if there is no questions, is there any question?
No, sir, not yet. But as and when they will come,
If at any time it comes, please feel free to stop me. First,
yes,
we
sir.
need to
Yes, sir.
answer the question so that at that particular topic or that particular time only, that questions get
Will
resolved.
be resolved immediately.
And
Yes, yes.
thank you.
As and when it
Yeah,
comes, I'll just let you know.
yeah, thank you. So I just show you one very interesting thing which is happening in the this practice of RERA, and you just try to just see what is this. See what this is saying. So just to apprise you all, This is a email of Income Tax Department. Yes, you have heard very much correctly. It is what I am talking about. Income Tax Department. I am not talking about RERA. The Income Tax Department had shared, had sent this email to all its assessees. So, see how the government is now behind the aggressive implementation of this act at the grassroots level. You all would be surprised to know that there is a direct intervention of PMO, and the PMO directly wants that the RERA Act should be now implemented in a very dynamic manner. Undoubtedly, 8 years were a little bit hard. There was GST implementation, demonetization just happened. There was COVID, through which the real estate sector had gone through. Many of the regulators were new to this regulation. They were also in a learning phase. But now the PMO says that 8 years are sufficient, and we assume like whatever the dust was in and around, that dust have been settled now. So see what the income tax department had sent. Dear taxpayer, are you planning to buy a house? Have you already booked your dream house? Are you having any doubt about builder or the project? If yes, you need to know about RERA. So friends, the practice of RERA is not limited to the developer. That needs to be very much clear. The practice of RERA can and should be extended to the allottees, should be extended to the agents who are giving us support to these allottees and the developers. So these could be the core areas, the core clientage where you can serve as a RERA consultant slash real estate consultant. If we see how important this is becoming in life of everyone, that would be directly correlated with the roti kapda makan quote which I told you previously. A house would be required by each and every family. The timings could be different, but at any given point of time, it is said that a person makes his own house in his lifetime. So every person is required to make his own house in his lifetime. Section 56 of the RERA Act gives us an opportunity to present ourselves in front of the RERA authorities, the adjudicating officer, the RERA tribunal. In addition, there are many responsibilities which are there with us as chartered accountants to give the certifications, to give the cost breakups, etc., etc. We would be understanding. We can create agreements, documents between the allottees, developers, for the developers for their internal working, for the agents, and so on and so forth. So with this mail of income tax, we just review and see it more. What this mail says, a central law to regulate and develop the real estate sector and protect the interest of home buyer. So they have tried to define the RERA, that is R stands for regulatory oversight, E for the empowering home buyers, R for reforming real estate sector, A for accountability and financial discipline. Friends, if a sector which is second biggest contributor of the GDP, if that sector is strong, then you can imagine how strong the economy of a country would become. If all the home buyers are empowered by the regulation, are empowered, and there is no fraudulent activity, and all the things go smoothly and systematically, then how important that can become in the development of a country. So I just want to restrict this. I don't want to show to you. I want to ask a question to you all people. What could be or what are the key benefits which a home buyer would going to get from this regulation in place? It might be like you might have known, you might be having a knowledge, or you may guess if you are absolutely new, if you have not heard about the act. So if you all can help me out with knowing this, what are the key benefits a home buyer would going to get if the RERA is there in place, it is there uh, implemented properly. So if you people would going to keep on like interacting, it would be a very fruitful discussion. We would be, and like by the end of the session, we would be like learning something from each others. Yes.
Sir, there is a request.
Yeah, please.
Please explain how land cost is calculated in case of joint development agreement in the nature of profit sharing and area sharing agreements.
We would be coming on that question in like our session. Yes, we would be discussing.
There is one more question. Whether RERA is applicable on industrial land in Andhra Pradesh, especially SEZ developer or non-SEZ developer.
So we need to check the Andhra Pradesh regulations. What it says, to the best of my knowledge, Chennai have came with a clarification like industrial would be required to get themselves registered. SEZ definitely no, because SEZ is a foreign jurisdiction. It is not a jurisdiction which is there in the country. So that would not be certainly not be applicable. For the rest of the industrial development, we need to check. Like I am not having a clarity what is the latest development which have been done at the Andhra Pradesh level. So sorry, like I won't be able to give a correct view or an answer to that as of now.
And sir, there are answers by the question asked for the question asked by you. First is transparency, and the other answer is timely possession of flats, no diversion of funds.
Very nice. Thank you. Any more answers towards the question of key benefits to home buyers?
That's it till now.
Thank you. Thank you. So see what the authority says. Very well told. Transparency. the accountability, that would going to boost the investor confidence. So friends, here, like, we are not talking only about the confidence of investors who are the first time home buyers. We are talking about the investors who, being an investor who wants to go for their second home, can see real estate as an opportunity to invest in, where they can take fruits of any fixed income in terms of rent which they can receive, or they can take the fruits in terms of capital gain. In addition, as we know, from wherever anybody raises or leaves his hometown or home country, they always have a feeling towards that. And NRIs especially do see that the country, the state, the village from where I had healed from, today, if I am capable, I should have an exposure towards that area. So a big real estate investments are being done by NRI. Institutions, big institutions, look forward for investments in a country in the real estate sector. So these all, the confidence of all matters for the economy, because it's going in a sector which is a biggest contributor post agriculture. Friends, if I am telling you the investment horizons, the people who are looking forward for investments, this is again an opportunity for us as professionals. We can guide these NRIs, the institutional investors, how they can shortlist, in which manner they should come, they should scrutinize. We can do a due diligence on behalf of them for getting their investments done in a secured environment. So, again, what I have told previously, RERA is just not an act or a regulation to practice. This is a key for the real estate practice. So, somebody in and around the real estate practice needs to be there in this RERA Act, and many branches to start or kickstart from this practice of RERA. And the way the information technology is being developed, the way the dynamics of the country are being changed with the mode of digitalization, the way the information gets transferred from the way of the social media, these regulations, the act becomes more important. Then another benefit to a home buyer is, whenever a money was given previously, this money many of the times get to use to be siphoned off. That is, this money got removed from the account from where it was actually given for the purpose for which it was actually given for, and it was utilized in some other activity, maybe at the personal level of the developer, or maybe acquisition of another project, another land, and so on and so forth. Now, with the act in place, 70% of the amount would be withdrawn by the developer only in case the amount is withdrawn for the development of the project. So it is directly correlated to the proportion in which the development have been done to develop the project. Only to that extent the amount could be now withdrawn. Less rest amount would be kept as a fund with the developer to develop the project. So you can see how secure a land person who is investing in land, a person who is investing in project becomes that his money would not be siphoned off. Either it would be there in the bank account or it would be utilized in the development of the project. Now, earlier, it used to happen that any amount of changes were not acknowledged by the developer. The developer used to do as many changes as he wanted to do, and there was no acknowledgement of these changes which he used to make. But now, if any of the developer post selling of the units needs to change anything, then they need to first take a consent from the allottees and post those consent, submitting it to the authority. Only after that the changes could be implemented. So I defined the RERA Act in a very simple terminology which says that जो वादा किया है वो निभाना पड़ेगा. That is whatever you have committed, the commitment needs to be fulfilled. You need to fulfill the commitments which you have done to your home buyers. So if any of the commitment you are changing your commitment, then you have to revisit the home buyer. You need to take a consent from that home buyer and then only you can move forward. So again, it's a professional opportunity where we can guide our home buyer in case he have been cheated, in case he have been misguided by telling his rights by going to the RERA authorities and seeing that the rights are there being fulfilled, the rights have not been breached. We can create documentation. We can file a complaint against the developer in case so required. As compared to the developer, we can guide the developer at a very initial stage of our advisory where we can tell them that if at any given point of time you think that you need to change, that would create a issue, a concern for yourself. So it would always be suggested and better that you do your planning full proof at the very initial stages only. We give them a full chart, full BOQ, full detailing and SOP for our developer clients, which suggest that these are the key points which you need to take care to cross-check these key points at the initial stage only. If you find any flaw at the initial stage of planning only, you can rectify it. And with those rectification, it would be helping him that at later given point of time, he would not be requiring to go to the allottees for taking their consents in terms of changes. So, for example, there are 100 units. Out of those 100 units, a developer have sold 50 units. So, in totality, he would require to have a consent of two-thirds of the people out of 51. Why have used 51? Why have not used 100 or 50? The reason for it that 50 units have not been sold. And because these 50 units have not been sold, it is either being considered as it is being held by the developer himself, or in the regulation and the act it is being mentioned being held by his family. These all would be considered as a single unit. So in totality, the 50 units has been kept as a single unit. So 50 we have sold, one we have taken an allocation of the developer. So in totality, 51 units. Out of these 51 units, two-thirds of the unit holders needs to give a consent for any changes. Changes like changes in maps, changing in the area, changing in the layout, changing in if any amenities have been changed. So any changes which was as compared to the one which was proposed, which was given by the developer to the allottees, would be requiring a two-third consent. And finally, in terms of the quality of a product, the one which was previously committed, the quality would be there because whatever have been committed at the initial stage needs to be delivered, needs to be given. So this is all like what I am talking and showcasing you what the department is sending. As like we have discussed, the mandatory registration, which is if any of the units are more than 8 or 500 square meter. Friends, here, please don't take the apartment as a consideration. If this is 8 land parcels also, then also it would be covered. So the confusion remains as told previously that RERA is applicable on the apartments, high-rise building or the bungalow project. It is not like that. If any land development is also there, it would be applicable. In addition, there is a structural defect liability clause which is there. So if any of the unit post getting it occupancy and completion certificate, there is a defect, then within 30 days of filing the request to the developer needs to get it rectified. So indirectly, you can say it's an insurance which a home buyer is getting in this regulated environment, where if any of the defect are there, then that would be rectified by the developer. In addition, we would be discussing about the OC and the CC later on in like the area where like we would be discussing about completion. So I'm just going to an overrun about this email of this income tax department. Then they are saying that no advertisement without RERA registration. So all these registration are required to be done before any of the projects are required to be sold for the allottees. That would be covering the residential, commercial, as told in some of the states. The industrial would also be covered. It would be for the private and public bodies. What this means, public and private bodies. Again, there is a big ambiguity, there is a big confusion, or you can say that many of the people, majority rather, I would say, would not be knowing or are not being knowing about. There is a development authority, like Delhi being our capital, we keep the example of Delhi Development Authority. So if we see, Delhi Development Authority is having two major roles post RERA. Primarily, it was having only a single role where it used to give approvals to the projects which was to be developed in its jurisdiction, that is in the area where Delhi Development Authority is having its jurisdiction. Apart from like the development of the city, that was like what was taken care by the Development Authority. In our example, Delhi Development Authority. In addition to it, Delhi Development Authority develops a project, maybe for a low income or middle income housing, or maybe for the residents at a subsidized price, subsidized in terms of there is no profit element which is there, there is no extra cost or burdens which are there. Whatever cost have been done, whatever cost was uh, expenditure which had been done, that was to be like recovered from the allottees to whomever the allotment goes to. Now, with this public body, this development done by the Delhi Development Authority would be charged under RERA as a project. So the development which the Delhi Development Authority is doing for getting it sold to a public at large, if wants to sell it or wants to advertise it, before any of them, it needs to first get this project registered with the authority, that is the RERA authority, and then only they can be able to sell it. The confusion arises. Delhi Development Authority is a government body. RERA is a government body. then why like there's a conflict? Why like these authorities need to register the government projects also, projects which are being run by these development authorities or the municipal corporation or the urban development bodies. Why? This is because of the act. Now, any of the development, if it is done by any association, by any person, by any society, by any government authority, by any entity, then in those circumstances, the projects needs to be first registered and then they needs to get themselves reach to the allottees through the advertisement or by advance. Now, there is a very big reduction in the frauds. Reason for which majority of the projects are now getting registered. But then also majority of them are not registered. As on date, there are around 1,40,000 odd projects across the country since 2007 which have been registered. But I assume there are equal number of projects. I again insist and tell you equal number of projects which are not registered. Places in the municipal areas, places in the panchayat areas, places in the city area also, which are undergoing through violations, are not being registered. And here where is the opportunity. But then also, overall, there is a reduction in any of the fraud which happens with the allottees because of all these uh, registration which is being done. In terms of like the resolution, it is like the any of the non-compliance if made by the developer, then in that case there is huge hefty penalty. So friends, you can just understand that penalties which are starting saying that up to 5%, up to 10%, these are the huge penalties which are uh, aligned in the Act. So there are strict penal provisions, fast track dispute resolution mechanism. The mechanism are through the regulatory authority, adjudicating officer, or the appellate tribunal. So as told to you previously, Section 56 gives us a right to appear, to present our client, maybe the allottee or the developer, in front of these forums of regulatory authority, the adjudicating officer, or the appellate tribunal. And that disclosures are mandatory, which needs to happen. So this is what like is being told and uh, showcased to the allottees at large across the country, the taxpayer. So in other words, we can say the bigger community which would going to go and purchase a house, the bigger community which would be exposed towards uh, doing investments in the real estate would be earning. And if there are earning, then those people, if being educated, then you can say the biggest chunk, maybe to an extent of 90, 95% of the people would be like educated towards this regulation. So there is a guidelines which is given in this uh, uh, email which have been sent by the income tax department, which says like the all the purchases needs to be done by a registered property owner only. That is, that project itself needs to be registered. In addition, the agent should also be registered. In regard of the agents, it has been very clearly mentioned that the agents, if working in a registered RERA project or non-registered RERA project, then in both the circumstances, if he is an agent, he needs to get himself first a registration, and then also he can participate in the activities of buying and selling of any of the property. It is suggested that a due diligence needs to be taken care. Again, this becomes a professional opportunity for us for getting the due diligence done on behalf of our client. For the advertisement, we would be taking it separately in detail. So advertisement, like there needs to be the credentials needs to be verified. There needs to be the terms and payments needs to be there. These terms of payment needs to be absolutely clear. So if any of the home buyer is paying the amount to the developer, then post giving 10% and before giving any amount after 10%, the developer should ensure that the project agreement to sell with the home buyer needs to be registered. If the home buyer is not given an opportunity of getting its agreement to sell registered under Section 13 of RERA Act, then it's a big violation which is being done by the developer. And it is the responsibility of the developer that such projects where he has sold and taken 10% of the money, those units, the agreement to sell needs to be registered, and the liability for getting it registered lies with the developer only. In the agreement to sell, there is a detailed mentioning about what is the layout of the project, what are the specifications of the units, what are the specifications of the project, what are the common areas which are there, what are the amenities which have been uh, are to be delivered to the developer. They all needs to be put in place. So friends, you can understand that if you have given a payment to an extent of 10% and everything is there verbally, then it's a right time post payment of 10% that everything should come in writing. With this, there would be a binding towards the allotee and the developer both, where the allotee also gets himself liable towards the timely payment of the money to be given to the developer. Many times it happens that allotee gets the booking done with the developer, and if the developer, the value of the asset appreciate, then the allotee comes and say that yes, I have booked so long, it's been so long time that I have booked and you have not yet delivered me my unit. And at times it happens that if the value reduces, then the developer just keep running behind the allotee for his payment. So in both the cases, if the allotee is at default, not paying on time, then it is the right of the developer to cancel such agreements, such documents. So it is helpful for both the developers and the allottees to fall in such agreements. Again, this is a big professional opportunity. There is a set format for the agreement to sell, but then also we can suggest add on some of the strong areas where which should be placed in the agreement to sell and which can protect the developer or the allotee. So vetting creation of these documents could be helpful for the our client, and again it becomes a professional opportunity. Then in case of the payments, they need to be timely there, there needs to be a proper occupancy and a completion certificate which needs to be there, or if there are no any non-compliances, then that could be dealt in the uh, courts of RERA, uh, maybe at the authority adjudicating or the tribunal level. Post tribunal, the matter would going to go to the High Court, and post High Court, the aggrieved party may go to the Supreme Court. So this is like the legal framework which the RERA is having. Now, friends, I have just tried to give you an overview of RERA. I have just tried to showcase how the manner the government authorities are seen. So I forgot to tell you one thing. In the last, in this, in the PDF which I've shared, it's like written the Ministry of Housing. So it's a joint effort, the income tax department, where the income tax department is connected to the taxpayers and the Ministry of Housing, under whose ambit this act do comes. So it's a joint efforts of both these ministries, Ministry of Finance and Ministry of Housing, to educate the home buyers, the taxpayers for the RERA Act. Why I have told you so much about this income tax bill? Friends, one thing was asked at the initial, can I start the practice now? Yes, this is the reason. These are the reasons. Till date, I assume, to the best of my knowledge and understanding, only 10 to 15 or maximum 20% of the people know about RERA, their rights, their responsibilities. There is a big number of people who are not knowing about their rights, their responsibility. And these type of initiatives taken by the government are making more awareness. If the awareness would be coming, there would be lot of knowledge impartment which would be required. There would be lot of opportunities in terms of the new projects, the new allottees, the new advisory which would be required. And here where the opportunity gets created. So that roughly have I've tried to cover an overview of what RERA is, what is going in the backyard for like the development of the RERA Act. Now we would be going very specifically, understanding very specifically about some key areas of practice which is being developed in the coming time currently, which is you can say in a very important role playing field like lapse projects which have already been registered but are lapsed, project where the orders have been given, execution would be required to be done. Projects where the completion have not yet been taken. The complete. Are there any questions?
Yes.
We take after just a minute.
Okay.
I'm just trying to tell like what we are going to know more. So the completion certificate, what this completion certificate is, how the importance of this completion certificate and the occupancy certificate is becoming. What is the importance of advertisement now? What is the importance of the cost bifurcations? How important the certificates of a chartered accountants are becoming now? The quarterly compliances which are required to be done. So these would be the areas we would be knowing more in detail what is going in and around the country and the area of practice which we need to or required to focus upon while giving advisory to our client so that none of our client falls in any of these areas. So, as we all know, like precautions are always better than cure. So, if we guide our clients that these are the things which would you could face in time to come, then in those circumstances, we can help down him to grow his business more. So, yeah, we can take the pending questions and then move forward from here. Survi, you can please take the questions and post we answer those questions, we would move from here.
Yeah, sure, sir.
Yeah, please.
So we have 3 questions now. Dear sir, if I am buying land and give it for development to builder on sharing basis of flats 60 to 40 ratio, how am I affected with RERA?
Can you come again, please?
Dear sir, if I am buying land and give it for development to builder on sharing basis of flats 60 to 40 ratio, how I am affected with RERA?
Okay. So here, like I am assuming, you are a landowner and you are giving this land to a developer for a joint development. In the act, it is being clearly mentioned whoever is participating in the development of the project, then those entities or the person would be following in the responsibilities and liabilities towards the owner. Now, in this case, as the landowner himself is also involved in the ratio of 40-60, he is equally liable. There are some authorities, some clarifications which have been came from different authorities. So I just tried to showcase those clarifications. With that, you would be clear that what I'm saying. So if I, as a landowner, have just given my land and all the responsibilities are being taken care by the developer, and this have been clearly defined in the development agreement. So whenever this transaction happens between these two parties, there is a relationship which gets created, and this relationship is with this document of developer agreement. So with this developer agreement, when this transaction kickstart, I need to clearly define my roles and responsibility as a developer and as a landlord. So in these roles and responsibilities, if I have clearly mentioned that my responsibility is just mere giving the land for development, and I am not participating in the day-to-day activities like signing of agreement, day-to-day finance, or my allocated units. So to an extent of 40% units which have been allocated to me as a landowner, I'm not selling those units before the occupancy and the completion comes. In those circumstances, I would be only acting as a person who is just giving the land for development to the developer. In these circumstances, I, as a landowner, would not be liable in the eyes of RERA authority. What I have summarized in this last 1.5, 2 minutes are like various circulars, various judgments which have came across the country, and I have just tried to summarize and had just tried to present it. In addition, I'm not participating in like the day-to-day bank activities also. So basically, my role is just when I prove this, that my role is just limited towards the land giving, that I've just given the land, then in those circumstances, I would not be held liable. Hopefully, I've tried to answer the question. You can take the second, another question.
If industrial plots given on lease only from 33 to 99 years, no sale option is there at any time in future, is RERA applicable?
So I missed to tell one thing at the initial stage, where I was bringing the project in the ambit of RERA, that any of the development which is done for the sole purpose of leasing, sole purpose of giving on rent, where I don't have an intent to sell or advertise to sell, in those cases, RERA would not be applicable on those projects. Now, there is a gray area of lease. There are normally two types of lease, which is a short-term lease and a long-term lease. There is no defined definition of long-term or short-term lease under RERA, but MahaRERA have taken a stand, and it has been considered that generally the leases which are of 3 years, 5 years are considered as a short-term lease, and they are not considered as a long-term lease. You would not going to go and do the contract every year, every 2 years. There needs to be a certainty of 4 years, 5 years, and that is considered as a short-term lease. So RERA will not be applicable on these type of short-term lease. On the contrary, many of the states sell the land to the citizens for a long-term lease. So I, as an authority, have sold the land to the citizen, but it is this land is on the lease. I've sold it for a 99-year lease. So the actual owner, I am the actual owner after 99 years. If I am not intending to give or extend my lease to this citizen, I can take the land again back in my custody. So ultimately, the owner is the government, the person who have given for the 99-year lease. Such leases are considered as a long-term lease. They are definitely following in the lease definition, but it is a selling. So these type of leases would going to fall under the ambit of RERA. Hope I have answered the question.
And there's this one more question. Can an unregistered agreement be executed?
How an unregistered document could be executed? Uh, Document needs to be registered before it is being executed. So it is not a valid contract if a document is unregistered. It is not having any legal sanctity. So I think like with this we have completed our questions.
Yes, sir. These are all the questions we have, and we can continue.
So yeah, thank you. So now we try to move towards the biggest responsibility which a chartered accountant can carry. That is for like the creation of the certificates of a chartered accountant, which has been given by a chartered accountant to the RERA authorities. They could be given at two different point of time. First of all, there need to be an estimated cost. This estimated cost would be utilized at the time of registration of the project. So these are the basic backgrounds which one needs to know and one needs to account for while doing a RERA practice and giving a CA certificate. Now, if we see and understand, Section 4 to LD of the authority of the Act says that any amount which has been withdrawn should be withdrawn for the percentage of work which have been completed. Now, first of all, before coming to this stage, we need to get our project registered. At the time of getting the project registered, we need to see and ensure that there is a detailed cost bifurcation of a project which is being done. In terms of the basic bifurcation would be in terms of the land cost and the development cost. Land cost can uh, be captured from the cost of the land which is paid, the cost of the lease money, the cost of the conversion charges, any other tax and duties which has been applicable on the land, they all would be captured in the land. Then, for the development cost, you can understand that anything which is being or to be incurred for the development purpose, that all cost would be captured under the development cost. For instance, the cost of the raw material, the cost of the architect, engineer, the professionals, the cost of the building material, the cost of the taxes which are being levied, cost of getting the permissions done for the layout approvals. So there need to be a bifurcation of the cost. in a small, you can say a trip, a holiday of ours, or a small get together at home, or maybe small planning of uh, any systematic lifestyle, we do an estimated cost planning. We just try to understand like what are the costs which would be involved in getting this whole activity. Will this activity would going to shed amount which is under our capacity? It would be no over budgeting or no under costing. And the same thing would be applicable for a business to be done. If I have done an over costing of anything and later on I won't be able to offload with those costings, then I can end up in losses. Or if I have created an inferior quality product, then maybe I have an issue in the sellability. So again, this is a very big professional opportunity at the very initial stage when we are guiding our client for these cost bifurcation at the very initial stage. Maybe for taking the finance, what could be the finance cost? Would it be a feasible project? Would it be a viable project for going through? And that all working would going to give us a cost of the land and the development cost, which would be utilized in the registration of a project. Post registration of the project, the certificates are being given by a chartered accountant for the quarterly progress report for the withdrawals of 70% of the amount from the RERA account. So there are three accounts normally. This thing is not being defined in the RERA Act, but there are three accounts. One is the collection account, one is the RERA account, that is the separate account, and one is the balanced account, where the 30% of the amount would be kept by the developer. So for this 70% account, the chartered accountant is required to give a certificate to the RERA authority. There need to be two chartered accountants. Kindly note this point. Kindly be very absolutely clear rather, where the chartered accountant who is giving the certificate for the quarterly compliances and the chartered accountant who is giving a certificate of the annual compliances, that is the annual certificate, needs to be different. The chartered accountant who is giving the annual certificate needs to be a statutory auditor. So there's a lot of confusions which are there. Many of the authorities have not now pinpointed this point, and because of pinpointing of this point, the authorities are taking this very serious offense which has been done. As at the initial stages only, this have been clarified and told by the authority and in the act itself. This is what needs to be followed and understood. As per the estimated cost, we need to check what are the costs which have been incurred, and accordingly the certificates are required to be given. In addition, the quarterly progress report, where the information to the authorities needs to be served in terms of what development have happened in the last quarter, needs to be put in place, wherein if any units have been booked, sold, if any cancellations have been done, any advertisement have been done, any payments which were taken, any other information which the developer should provide to its allottees. All these information should be given on a quarterly basis. Many of the authorities have blacklisted in terms of putting these projects as a lapse project and not allowing these projects to further do any other registration of any new projects have kickstarted. So if a promoter in a project, his project is being lapsed, then in those circumstances, it may be a situation that he won't be able to register any other project. So how important this quarterly progress report is becoming, you can very well visualize and understand. There was a question which was asked previously that in terms of the area sharing and the revenue sharing, how like the allocations would be done with the landowner and the developer. So in terms of the area sharing, there is no transaction of money which is happening between both the parties. Here, the transaction is only happening in terms of the units, the area. So allocation would be done, and if the landowner wants to sell his units before the occupancy and the completion certificate, then in that circumstances, he would be considered as a developer only. The receipts of this amount, which is being there with the landowner, would be routed through the developer's account only. Having said that, it's been clearly mentioned in the act that there needs to be only a separate account for a project which could be there. In terms of and in regards of if the landowner sell these units post completion and occupancy, then the compliances of RERA would not be required. In terms of this person, sorry for the interruption. So the landowner would be considered as a developer, and if the units have been sold post completion, then they would be able to take the money directly in their accounts, and as the project has been completed, the applicability of RERA would not going to follow them. If it is a revenue sharing, then whatever percentage have been decided between the landowner and the developer, that percentage of money could be done, paid, and it would be considered as a land cost only and would be eligible for getting withdrawn from the 70% account. So that was a brief on the area sharing and the revenue sharing point of view. Cost, I have told, like how the estimated cost you need to put in place, how this estimated cost needs to be calculated, and what are the professional opportunities towards these uh, uh, creation of the opportunity cost. Again, these opportunities would be there for the purpose of raising loans, for the purpose of registration, and for the purpose of better and an effective compliance by a developer. So it would going to serve multiple purpose with a same and a single responsibility, which is being held by this creation of cost. In terms of advertisement, the authorities are becoming more stringent day by day. Almost all the authorities have came up with a detailed guidelines where they have told what would be the sizes of the font, what are the informations which are required to be placed in the advertisement. More or less, many of the authorities have introduced the QR codes which needs to be there in an advertisement of any real estate development. In addition, the RERA registration number needs to be there. The RERA website address, the particular RERA authority website address needs to be there. If any of these informations are not being placed, authorities are taking a suo motu cognizance and ensuring that a penalty is being charged towards the developers. So again, it becomes a very important professional opportunity where we can guide our clients how the advertisements needs to be done, and before publish, publicly giving these advertisements could be vetted by we as a professional. Recently, some of the authorities have clarified that if any of the advertisement are being given in the media, like the FM media, or maybe at the news, apart from newspaper, the television, or only in verbal form only also, then also they need to mention the RERA number and the registration number of the project and the website address of the authority. So you can understand how stringent the authorities are becoming day by day. In addition, if we are not giving anything to the client, then we should restrain ourselves by telling our client that those information should not be mentioned in the advertisements, because these information, if being given at this point of time, at this juncture of advertisement, can lead to problems in future, like the way it happened in many of the cases where many of the developers have given many amenities while they were advertising, but later on, when there was a time it was to be delivered, they were not able to deliver the same. The allottees have sued these developers in front of the RERA authorities, and they are now facing a lot of problems. To an extent, allottees have a right that whatever have been told to them at the initial stage, if not been delivered, then the allottee can claim his 100% of the money back along with the interest from the day he have given this money. So you can imagine how big loss it can create to a developer in case a wrong advertisement have been put in place. The project can go in vain, the project can go insolvent because of a small wrong advertisement. Yes, a small wrong advertisement can make the developer, the project insolvent. So you can understand how important this aspect of advertisement is becoming day by day. Imagine a imaginary example where there are 100 allottees. The developer have told that I would be giving a swimming pool in this project of yours, big advertisement given, big social media, big sale marketing techniques, and at the end, they have not given this swimming pool to the allottees. The developer are liable to be sued. by these allottees. The allottees, all these 100 allottees can say, after the project is being completed, that you had promised us to give this swimming pool. You have not given us the swimming pool. Please return our money back to an extent of 100% along with interest. So, see, the project is completed without a swimming pool. It would not be effectively told completed, but from the developer side, it is completed. But on the contrary, all the allottees are asking for money. So from last 5 years, if they have given money, the allottees would going to take that principal amount along with an interest. And interest is SBI prime lending rate or marginal lending rate. It depends on the various regulation plus 2%. That could be the amount which the allottees can claim with the developer. So you can understand the importance of the advertisement. Timely completion of the project. If the project are not timely completed, then the developer can seek a extension of that project. Again, this is a very big professional opportunity, which do exist with we as a professional. First of all, in terms of planning, at the stage when the developer was going with the registration, we could have advised him, we could have understood his timelines and could have advised that this should be the timeline you should mention while you are going and getting your project registered. If at that given point of time also that was not being followed, then at a later given point of time, the professional can advise of getting these projects extended with the authorities. If the projects are not extended, then the project would be following under the lapse category. And with the following in the lapse category, again, the authorities would not be allowing for any further project registration. In addition, the allottees would be entitled to claim interest. And if they feel like they can take the amount back to an extent of 100% from these developers. So, how important this timeline of date of completion of project becomes, and how important the extension becomes, that could be understood by if the extension is 1 year within the parameters, then the authority have an uh, right, authority have a jurisdiction, or you can say authority can give the extension. If it is beyond 1 year, then in those cases, the authority see towards the importance of the matter, then only they can give the, if so required, if they think that it is necessary in those circumstances, in those cases only, authority would be able to give these extensions. So assuming that the project got registered, the project got the agreement to sell got registered. There was a proper advertisement which was there. There was no extension which was required. All the compliances which have been done, and now we are standing that the project has been completed. How the project would be considered as a completed project? It would be considered when the completion certificate would be there and the occupancy certificate would be there. So if we understand what is a completion certificate, so this is a document which has been issued by the competent authority of that jurisdiction, of that local area where the approvals were taken, or from the architects where these architects have been given authority by the competent authority to issue the completion certificate. This certificate of completion is an evidence that, as per the building bylaws of that particular state, the project have been completed by the developer, and the project is in all manners as per the layout approval, as per the building bylaw, is now available for deliverables. But before deliverables, the occupancy certificate, that is it there? Is it available for the occupiers to get occupied? That is also need to be ensured. So occupancy certificate is getting and certificate where it has been proven that all the essentials which are required for a livelihood, that is, for example, the water, the electricity, the basic other necessities, all are there in that project, then the competent authority gives an occupancy certificate. Once the occupancy certificate and the completion certificate is there in place, the same could be given, can be uploaded, can be presented to the RERA authorities, and the projects get completed with these necessary documents. Now, once the project is completed, all the common areas needs to be given, needs to be given back, you can say, to the allottees, and that would be given by by formation of a society. So once the society is being formed along with the occupancy and completion certificate, then the handing over of the common area could be done by the developer to the in favor of the society, where the owners of the society are the allottees, and then post that the allottees through this society can run the working of this project. There are various means of creation of a society, maybe a Section 8 company, society under Society Act, society under any given law of that particular state, or uh, any guidelines which have been issued by that state. In that form, a society can be formed. Again, it's a big professional opportunity of guiding a client for a completion certificate or occupancy certificate or formation of that society, how the transfers would be carried on. On the other contrary side, an opportunity if we are dealing in regards of an allottees from the allottees side to check to vet that all these documents which have been given, which have been presented by the developer are correct and there is no misrepresentation towards these documents. So friends, with this is an overall picture of the RERA Act where we need to see in the real time how this practice has developed and how the opportunity to exist and the upcoming opportunities in this practice. Lastly, a very important is the execution. Many of the cases, almost 1,50,000 odd cases, have been decided across the country. And out of these cases, many of the cases are not yet being executed. That is, the order of the authority are there, but either the allottee is not abiding with the order, or the developer is not abiding with the orders. Again, this gives a very big opportunity where we can help any of the parties to get the orders executed with the authorities. So many of the uh, orders are there in place where recovery of money is required, recovery of sale deed are required. That is, sale deed are to be done in favor of the allottees. On the contrary side, many of the allottees who have not yet given money is required to be received by the developer. So these are the opportunities which are there in terms of execution. Again, if there is an order towards a developer and it is not yet been executed, again the project can fall under a lapse category and it would going to create problems for the developers moving. So with this, I have tried to summarize starting from 2017, where the Act came, the applicability of the Act, and what are the current uh, areas where like the practice could be focused upon, where like we can serve uh, our nation, we can serve our client, and undoubtedly expand our professional uh, opportunities in this real estate sector. So with this, I will request if any of the questions are still pending, I would love to answer them. Else, like we can uh, conclude the session.
Yes, sir. We have this one more question. Common infrastructure costs like road, drain, green area development for industrial park should be capitalized as an assets in the books of developer of industrial area or accumulated as revenue expenses for development and allocated to land cost.
You need to come again. I think the answer is clear, but then also I want to just uh, listen the question again.
Yeah, sure, sir. I will. Common infrastructure cost like road, drain, green area development for industrial park should be capitalized as an assets in the books of developer of industrial area or accumulated as revenue expenses for development and allocated to land cost.
So primarily we need to understand the land cost and the development cost. In a very summarized manner, or if we can say very straight line manner, the cost for land to an extension to an extent that we are going for the map approvals. So any cost before that for like which have been allocated for conversion of land or paying any taxes for the land, purchase of the land, these all costs would be accumulated in terms of the land cost. Any cost which is incurred for the layout approval and post that, these all costs would be associated with the development. If I have fairly and correctly understood, uh, our participant is asking for the development of road. So again, road is a infrastructure which is being given to the industrial park. So that would be captured under the development. Any greenery or any beautification cost which is being incurred by the developer, that again would be a development cost. It is what we are doing a development of the area. It is nothing to be associated with the land cost.
So, sir, these are all the questions we have till now.
So thank
So,
you very much, Surbi, and the team of the Secretariat Committee for NPO, our chairman of the committee and vice chairman, and all the participants for giving this opportunity to me and being a patient listener. Thank you, everyone.
thank you so much to you, sir, also for giving us time for this session today. It was indeed a very knowledgeable session for everybody, and I hope participants must have gained a lot out of it. Looking forward for more sessions from you. Thank you so much, sir.